Welcome back to the Junius Maltby channel. The silver crowd will be excited because we have another silver specific video. Looking at an article titled Price of Silver in 2017, Why It Could Bounce Higher. A lot of financial experts are saying that silver has a much bigger upside percentage-wise at this point than gold may, and that it looks very strong for the year and the future to come. We've talked about silver in the past on this channel, and you know my opinion on it. Silver's been a currency. It's been money, I should say. It's been money for over 3,000 years. We covered this years ago. I made a video talking about its role as money in the East, in China, and throughout Europe over the course of human history. And just recently, we made that video where we looked at silver's role and what it could purchase and the values of goods and services dating back to ancient times. So we know silver's money. We know it's been money for greater than 70 centuries. It's been right there alongside gold as a medium of exchange. So on that, I believe that silver always holds with it the ability to purchase certain goods and services as related to certain weights of silver. For example, the one I like to use the most probably and that is most relevant to you and I here in modern times is the quarter, the old pre-64 US quarter. Historically, when it was made of silver, was always capable of purchasing a minimum of about a gallon of gasoline. So if you convert a pre-64 silver quarter today into its US dollar value, it actually lines up perfectly with still being able to purchase a gallon of gasoline. That's the example I like to use often, and it's just in a small piece of silver itself. Silver market performed reasonably well in 2016, with the price of the precious metal picking up more than $2 to close the year at $15.88 per ounce. That in turn helped boost the prospects for silver tracking investments like the iShares Silver Trust. Not a fan. I don't like buying, again, you guys know this, if you're going to get silver, get it physical, but do not get paper silver or give money to these people who use silver as something that they can buy and sell rapidly on the computerized exchange markets over there. Get physical, don't get paper. But as much as investors appreciated the gains, they were a far cry from the highs above $20 per ounce that silver posted earlier in the year. Looking forward to the coming year, investors want to see the price of silver in 2017 climb back toward the $20 mark. But those who follow the silver market aren't sure how much progress the metal can make. Below, well, look at what could move the price of silver in 2017. What will move silver prices in 2017? The main difficulty that many people have in assessing the silver market is that it acts like a hybrid, showing characteristics of both precious and industrial metals. On one hand, even at prices that are less than 2% of the price of gold, silver is still roughly 100 times as costly as copper, putting silver in a gray area, in the middle of the price spectrum. Historically, traders have seen silver as a precious metal, and many mines produce both gold and silver, further associating them in the minds of investors. And we've talked about that, how silver's industrial applications and how it performs. Due to having industrial demands placed on it, sometimes when the economy dips, the price of silver will also dip because goods that it is incorporated into are no longer being purchased or used, thus driving down the supposed demand for silver. But on the other side of that, you also know that silver, when it is used in a lot of the industrial applications, is destroyed or used up. And because of that, even though there is a constant silver supply and production, a lot of the silver that is produced ends up being destroyed or eradicated through industrial means, the uses that it finds itself in. Thus, a constant silver demand has to be met in order for those industrial applications to continue. Whereas gold is mined, hoarded, and continually exists and is never typically destroyed. It sits in vaults and in the form of jewelry and coinage, and even if it's in circuitry or different circuit boards of computer systems, it can be waste recycled out of that, as they're doing and we're seeing in China. Yet in large part, silver is much more subject to supply and demand considerations than gold. Silver gets used in a wide variety of industrial applications, and that subjects it to the normal demand fluctuations of the global economic business cycle, as we just talked about. In addition, mine supply of new silver plays a role in setting its price, along with the willingness of those who have stockpiled silver for investment or personal use to bring it back into the market when prices rise. Even with those countervailing factors, silver traded largely in line with its precious metal counterparts during 2016. After a big gain linked to an early year stock market decline in 2016 and prospects for a potential collapse in the energy markets, silver climbed to its highest levels by mid-year. However, the final boost from the UK Brexit vote to leave the European Union didn't lead to the economic chaos that some had predicted. By the second half of the year, excitement about silver waned, and fears of higher interest rates sent silver prices down more than $4 per ounce from their highest levels of the year. Here's some 2017 price projections on silver per ounce. Citi Research, 1550. HSBC calling for 1875. ABN AMRO, 1540. UBS, 1860. BMO, $17. And right now we're seeing silver hover at prices that used to be considered a really good deal for silver. If you remember when it was hanging around in those 20s, in the mid-20s, there were many that thought we wouldn't even see silver back in the teens for a long time, and yet here we are in that range once again. As you can see above, there are two distinct camps among those following the silver market. Some believe that better conditions in the market will lead to substantial gains, while others see the current malaise lasting throughout 2017. The bullish argument for silver. Most of those who are bullish about silver prices in 2017 point to silver's capacity to decouple from the precious metals market. In particular, excitement about silver's industrial demand could be the drive for higher prices in the minds of some. Helping to support that view are the latest calls from President-elect Donald Trump for greater spending on infrastructure and construction. If the U.S. moves forward with initiatives that are successful in driving greater activity on those fronts, then the use of silver could increase. At the same time, many expect that silver mining activity will fall in 2017 from year-ago levels, continuing a longer-term trend. Even with prices having bounced from their lowest levels, they're still not high enough to make miners feel particularly enthusiastic about boosting production. The bearish argument for silver. However, those who are negative on the prospects for silver prices in 2017 point out the factors that traditionally hurt precious metals markets are poised to become stronger during the year. Late year dollar strength in 2016 has typically pushed gold and silver prices lower. Moreover, with many expecting multiple interest rate increases from the Federal Reserve in 2017, the costs of holding positions in silver bullion are likely to rise from their rock bottom levels of the past several years. Also, the supply and demand factors that theoretically drive silver prices haven't always matched up in the short run. Supply deficits in production of mined silver have been regular occurrences for most of the past 15 years, but that hasn't prevented the silver market from having wild volatility swings over that time period. What to expect from silver in 2017? Just about the only certainty with silver prices in 2017 is that they're likely to feature substantial moves in both directions, as investors try to figure out changes in geopolitical and macroeconomic factors affecting the market. That might stop the forward momentum that silver generated in 2016, but it could also create opportunities for those who have higher hopes for silver's prospects in the long run. So, in the end of the article, in the synopsis there, they basically tell you they don't know where it could go. It could go either direction. There's definitely some material to talk about. One certain fact is that silver will not go to zero. It holds value, it has value, and it's definitely a good place to hedge some money. We're seeing the Fed rate hikes touted as a reason that metals are going to be suppressed going into the future, and I just have a really hard time buying into that argument all the way it is relayed to us from the financial press. Number one, I don't think the Fed has a whole lot of room to raise rates. We're talking about fractions of percentages here because they can't do it. Their hands are tied by raising rates. They then in fact plunge the U.S. into more debt because we have to meet those interest payments. So it's very limited how much they're going to raise them, and the speculation on exactly what effect those interest rates are going to have on the metals market is still debated. And if anything, the international economy continues to point to uncertainty and instability. You saw the video that we put out yesterday discussing the wealthy elite buying precious metals, among other things, in preparation for disruptions in modern society's way of life. But just look at these articles here. Italy's bank rescue foreshadows nationalization of more EU banks. Italy being one of the world's most indebted nations is having some serious financial trouble over there in Europe. The EU itself is threatened. The EU could break up at any. We're seeing that discussion more and more often. The EU itself is on the verge of just fracturing. The amount of uncertainty that would create and usher into the financial discussions would most surely drive metal prices upward. We're also seeing talk about inflation coming like an onrushing train. There's talk that inflation is starting to show up and rear its ugly head in all different parts of the economy. And as you know, if inflation is taking place and it does rear itself, we're going to see a rise in metal prices. So you combine what's going on in the international economy with the constant expansion of the money supply, the suppression of interest rates for as long as they were, with some instability coming, it definitely paints a good picture, a strong picture for silver. And speaking of silver, just another reminder for all of you out there who are silver stackers, the pre-sale for the Junius Multi Channel round is there. Thanks to you. You guys did it. These coins are available for pre-order at Quality Silver Bullion, QSB. I made the payment totaling $2,000. It was $2,000 even to have these dies made, $400 for the two-dimensional die on the reverse, and $1,600 to have the 3D dimensional die for the obverse there. So this is a community-designed, community-funded coin. The dies would not have existed if it wasn't for the combined effort of all of you who are part of this channel. Every one of you deserves and should have at least one of these coins in your stack, in your collection, or just as a challenge coin, as a coin to carry with you and remind you of these principles and the things we discuss here on the channel. There is a lot of symbolism, a lot of meaning that was put into this coin, and there's a reason for literally almost every design and word that's on this coin. All right, thank you for tuning in, being part of the Junius Multi channel. Thanks all of you for everything you do to contribute and participate and keep this channel motivated and going.